G'day traders, today we're going to be talking about dealing with trading and emotions. Stay tuned, we'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading, and today we're going to be talking about dealing with trading emotions. Now, one of the biggest things that retail traders will come across inevitably is that your biggest enemy to your trading success is staring back at you in the mirror. You know, often trading itself can reveal a lot of our weaknesses and some of the other hidden pitfalls that we don't really see until we get further down the rabbit hole in our trading quest. You know, emotions can prompt us to alter our trading plans once we're into the markets. We do all this research, we study, we take courses, we go through the process, and it all makes sense. We've got a winning system, and then we go live, and then every time we go into the market live, all of a sudden our emotions kick in, there's real money on the line, and everything goes out the window that we are supposed to be doing. A lot of time we intertwine the results of our individual goals and dreams and beliefs and our trading ability to the outcome of every individual trade. And you know, I know this, and it's a challenge at every level of your trading, no matter where you're starting from or where you're at in your trading, especially if you usually are trading on your own. It's an individual quest where we all have our own aspirations and dreams and goals, and that's what brings us to the markets. The markets, you know, seemingly offer us an easy path to achieving those. So one of the things we'll talk about today is how we can deal with our emotions in our trading so that it doesn't interfere with us actually being able to achieve consistency and results in our trading results. And we talk about this in the 7-step daily routine for high performance traders. If you haven't done so, go to my homepage, download it. It's an audio file. You can listen to it wherever you go, but it's about creating daily disciplines, daily habits, daily rituals that are congruent with you achieving not only your goals and your trading results, but in your personal life as well. So we talk about creating a vision. We talk about mindset training on a daily basis, setting goals, journaling your trades, accelerating your learning, all the little things that are going to help you be consistent and also focus on constant progress in your trading. So what are some of the things that we can do to deal with greed, fear, hope, pain, and the discipline that's required for us to achieve these long-term results? Number one, letting go of the outcome of each individual trades. I love what Peter Brandt says. He talks about every trade is just another trade in a series of datum points that over time will add up to give us a clearer picture of where our trading results are. And as individual retail traders, we tend to hang on the result of every trade. We have a few losers in a row, all of a sudden we're looking for a different strategy. We system jump, we look for something that's better, the holy grail of entries and exit strategies. When in our testing or in our strategies, we compile a series of trades, and then we see that there's an edge there. We want to trade that edge, but then as soon as we get some losing trades, we lose the confidence in that system. So, letting go of the outcome of each individual trade. Now, part of that is being able to stick to your trading plan. We talk about this in one of the other videos, the 3 M's. Brent Penfold talks about this: mindset, methodology, and money management. So if you're sticking to those rules in all three of those aspects, obviously the mindset component is the ability to flawlessly execute your trading plan, manage the trades, setting targets or exiting trades, you know, journaling, observing, learning from our mistakes, learning from what we've done well, trying to simplify and repeat that process to be consistent. But your money management and your methodology, you know, often traders will lose. Losing traders will try to average or double into the next trade to make up for their losses instead of just keeping that consistent approach to the markets, trade in and trade out. Which brings us to number 3, focusing on the trading process. So, you know, you've got your steps in terms of entry, exit, stop placement, money management, position sizing, exits, all the little things that are going to ensure that we follow that trading plan to a T. This is what one of the things that Richard Dennis talked about in the Turtles plan, was that they based everything on price, because then there was no reason, that they had all the information that was available to all traders, and they had a clear mechanical process that was defined every step of the way. And that was what the next step for their traders, therefore, then was for them to flawlessly execute that trading system. Everything was clearly defined. There was not really any discretionary element to that system whatsoever. Number 4, staying grounded on the idea of long-term consistency. So again, extrapolating over a series of trades that you've got your edge in the market by keeping everything consistent. So one of the biggest things I've learned from Peter Brand is, predefining risk and having an asymmetrical risk reward. Now that sounds something that we are probably all familiar with, but when you actually can start to identify that into your trading on the charts, being able to have a 1 hour risk and targeting a 4 hour profit, then therefore now that starts to make sense that you can lose 1 hour on a trade. It gets easier to lose 1 hour if 1 hour is consistent every time, and you might get 2 hour on a trade, or 4 hour, or 5 hour, or 10 hour, or you might get 0.5 hour, depending on what your exit criteria is. But over the longer term, your positive expectancy may be 2.7 R or 1.2 R. But it's important to know that your losses are consistent and that they're not all over the place, and that your position sizing and capital allotment to those 1 R are equal across the board. Number 5, risking, we just sort of touched on that, risk versus reward. Have some kind of asymmetrical risk reward strategy. Now, I just had this conversation with a close friend of mine this morning. He trades short term. His stops are around 12 pips, and he sometimes targets 20 to 30 pips. But sometimes when you get down to that, that where the profit isn't that much greater than your stop, you have to have a very high hit rate, and that can require you to be extremely skilled at hitting those trades and also consistent day in and day out to be at the best of your ability. And that's where algorithmic systems, computer generated systems, have an advantage, of course, because they have no emotion in the market. But for an individual retail private trader, that can become consistently a bigger and bigger challenge over time. Number 6, do the right thing. Jerry Parker, one of the things that just resonates with me all the time from a podcast interview, I heard Jerry Parker was one of the original Turtles with Richard Dennis. And he talks about Richard Dennis interviewing or talking to him in the second or third week that they had started the Turtle program. If you don't know who Jerry Parker is, he runs Chesapeake Capital. It's a big hedge fund, several hundred or maybe $1 billion under management, but he's become very successful. But Richard Dennis asked him, how's everything going so far, Jerry? And Jerry Parker said, well, I've had some trading signals and I've taken a couple trades here. I haven't taken all the trades. And Richard Dennis said to him, just do what we taught you to do. Just take the trades and do the right thing. And so Jerry Parker talked about consistently just focusing on doing the right thing. And doing the right thing comes back to the 3 M's. You've got a plan, focus on the process, don't be attached to the individual outcome of any one particular trade, and just keep doing the right thing. Review your results, monitor and observe your behavior, take sample sizes and monitor how that edge is continuing to perform over time, but continue to do the right thing. So hopefully that helps you today, traders. Dealing with emotions, simplify your trading strategy, do the right thing, don't be attached to every individual outcome, stay focused on constant progress, and may the markets go with you. Have a great trading week.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.